lot of managements, and on the back of that, we have Sharan Bansal, who's the Executive Director of Skipper, who's joining us on the results. Now, remember, Skipper is down and out, almost 3.5% in the trading session, reacting to its Q3 results. But let's get an understanding of the results from Mr. Bansal. Mr. Bansal, hi, morning. Thank you for joining us. Your Q3 revenues grew with the EBITDA margin expanding, and the PAT is also up a year-on-year basis. What drove this margin expansion? Better product mix, execution efficiency, or cost control? And how sustainable is this level of margin going forward?
Hi. We obviously have given a very strong quarter. We have ended with our highest ever quarterly revenue, quarterly EBITDA and PAT. And our order book is also at an all-time high at almost $1 billion plus, 9,000 crores. The margins are helped by, of course, a strong performance, greater amount of T&D execution with last year. We're also, of course, carrying a very strong. We started the quarter, with a very order book, which is further expanded now, as I said, ending with 9,000 crores. And of course, the new capacity build-up, which we have been gradually doing, that also is playing out now. So definitely, we believe that these margins are here to stay. And in fact, we are gradually and slowly and steadily moving towards our long-term aspirational margins of 12%.
All right, Mr. Bansal, now what is the expected revenue conversion from your robust order book of, almost 9,000 crores over the next 12 to 18 months?
We have revenue visibility of at least 2 years with the strong order book that we are carrying. We are looking at, typically this order book is to be executed over anywhere between 1.5, 2.5 years. So you can take an average of 2 years. We are quite confident that this year, next year itself, or next year also, we will be able to deliver at least a 20% revenue growth, which should translate to a higher bottom line growth.
Right. Also, walk us through the strategic rationale behind the recent acquisitions, the tie-ups, and how does this deal really fit into the Skipper's long-term vision in T&D, your infrastructure, or the PVC products?
Yes, we have recently tied up with Lubrizol, which is one of the world's leading company in CPVC production. So for our PVC pipe business, which is growing very healthily, we have tied up with Lubrizol, which is a market leader. And we expect to deliver better quality to our customers, and obviously with better coordination and better pricing for us as well. So I think this will be a very strong partnership for us to go ahead. We are also, for our main business, for our engineering business also, we are looking at various kind of tie-ups all over the world as the export market potential continues to improve.
Sure. You have given CapEx guidance of rupees 250 crores. Now, what verticals are you looking to put CapEx in? And what is the timeline of this now?
Yes, last year and this year, we have invested close to about between 200 and 250 crores each. And now our capacity by the end of this year expected will be about 450,000 tons. We will continue our CapEx plans into next year as well, gradually moving our capacity up as the market obviously has a lot of opportunities. And Skipper is one of the only companies with full and complete backward and horizontal integration in our product verticals. So we expect the CapEx momentum also to continue as the market potential continues to unfold.
Right. Also tell us what has been your win rate over the last 12 to 18 months in terms of value of orders won versus the value of bids that have been submitted?
Typically, we have been able to deliver a 20 to 25% win rate of our order book, of our bidding pipeline. Our bidding pipeline currently is about 25 to 27,000 crores odd. Of course, this pipeline is increasing because of various export markets that are opening up. As you know, the India-EU FTA was signed recently. We expect good opportunities to come from the European Union markets now. North America also, we have seen good traction in markets like Canada, Mexico, etc. The US is a bit slow right now because of the tariff situation, but I think over the subsequent months, as the trade deal materializes, we should see opportunities coming from that market as well.
All right. So, in a nutshell, we can say that the win rate has improved or stayed stable.
Yes, the win rate absolutely has stayed stable. The bidding pipeline has definitely been increasing.
Right. Also, what are your expectations from the upcoming union budget in terms of allocations and policy support for your sector?
I believe that the union budget will continue on the overall government capex, which has been quite prominent over the last few years. If we look at the power sector, a lot of good power sector reforms have been done by the government in the last several years. If you notice that the state discoms have actually delivered a profit after a very long time recently. So I think this momentum will continue of reforms, and that will continue to see more and more opportunities now at the state level. So far, our demand was largely being driven by interstate projects taken up by Power Grid and other private central utilities. But now we are seeing opportunities now coming up for TBCB bidding at the state level as well. So I think that's a very positive scenario going ahead for the demand situation.
All right. So, are you still on track to meet your Q4 FY26 and whole year guidance then?
Yes, we are absolutely looking at a 25% plus growth in quarter four. For the full year, we should be able to deliver a 20% growth in 20% plus growth in top line, and the bottom line growth should be a 35% plus.
Okay. And what new projects and capacity expansions is the company planning to undertake over the next 2 years, and how do these align with your growth and order book visibility?
We are seeing plenty of opportunities, of course, and we are also going to be evaluating both organic and inorganic opportunities while we pursue the growth in our sector. We have grown our capacity from 300,000 tons 2 years ago to 450,000 tons by the end of this financial year. This capacity expansion, as well as entry into newer products, will continue as the sector offers more and more opportunities.
That's right. I think it's time up. Thank you so much, Mr. Bansal, for connecting with us and speaking on the numbers today. Thank you so much.
Thank you.
And with that, it's time for a short break. But then post that, we have more managements coming up to talk on their Q3 earnings. Stay tuned.